All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com, and there you can download my free ebook that will teach you the basics of options trading. All right, so today is it's March the 29th, right? It's Wednesday. It's approximately 11:16 a.m. Eastern Standard Time. So yesterday I actually put on a 1 DTE, days to expiration trade, meaning that the trade I put on yesterday actually expires today. And I did that for several reasons. One, because the overall market environment is improving, although it's a short-term trade. Nevertheless, the overall market environment is improving. And two, because the market itself over the last few days hasn't really moved quite a bit. So it's been trading. It's actually been closing pretty much at the same price point for the most part. So I'm just looking at my spreadsheet here. So for the last several days, the price of the underlying of SPX has closed around 39.70, 39.75 roughly, right? So yesterday it closed at 39.71. And so, again, so the market hasn't really moved a lot. And so I was expecting that, considering yesterday when I put the trade on, the trade was, the price of SPX, right, was around 39.50. And I put the trade on around 1:50, 1:55 p.m. And I put the trade on, as you can see here. So I sold the 38.80 and I bought the 38.70, right? So the credit that I took in, $270, as you can see here, pretty much made that entire. So actually, early on, I had the entire 270. I thought about closing the trade out, but I said, the price of the underlying is so far away. The price of the underlying is so far away from my position on the put side that, unless something extremely unusual happens, my position is going to expire out of the money, and so I'm going to walk away with the 270. But when I put the position on, it was at yesterday. It was at 350, 39.50. My color keeps changing here. Give me a second. So it was at 39.50, and considering that over the last several days the market hasn't really moved much. It was actually falling yesterday as I put this credit spread on, this put credit spread on. I was expecting a bounce actually before the market closed yesterday, and I was anticipating that the market would actually open up today. And so both of those scenarios have played out. The market actually bounced before it closed yesterday, and so I was already in the green when I put this position on. So like an hour after I put this position on, around 3 o'clock, I was already in the green. And then this morning when the market opened up, I pretty much had made the entire $270, right? So a 1 DTE trade. And also, excuse me, the fact that IV has contracted significantly, it really sort of encourages you to get closer to the price of the underlying, thus taking on more risk to get a decent credit when IV has contracted significantly. So as you can see here, the IV rank is well below 20. I prefer for it to be above 20. And if we look at the VIX, the VIX itself is below 20 today. So major IV contraction. Not much movement expected from the market, right? And so today I'm probably going to put on another 1 DTE trade, and I'm probably going to put it on the call side, since we're already up 35 points, right? So just looking on the call side, so may go up to the 4070, 4080. That's an okay credit. I prefer at least 45, maybe 50 cents, but nevertheless, I may take that 35. Now, if the market continues to decrease in value, it just depends on where the market is around 2:30 or 3 o'clock. That's going to determine where my position is going to be, whether it's going to be on the put side or on the call side. But right now, I'm leaning towards the call side. Now, if we look at the charts here, so this morning when the market opened, it opened at 39.99.53, I believe. And so based upon the opening price of the day, I mark off my percent levels. And if you're not familiar with what this means, I have a link to the video in the description below where I explain the significance of these percent levels. So I marked up my percent levels here, 1%, 2%, 3% to the upside, and also to the downside. So again, that gives me an idea if I wanted to do a 0 DTE trade, which I'm probably not going to do today, but it gives me an idea of where I need to be. And I prefer to be above the 2%, move to the upside, or below the 2% move to the downside. And again, check out the video, check out the link to the video below explaining the reason why I look at those percentages. And also, by the way, if you have not already, please subscribe to the video, subscribe to the page, the channel, and also like the video. And I'm giving away free information here, so it doesn't cost you anything to subscribe and also to like the video. So I definitely appreciate it if you would do that for me. So yeah, oftentimes when IV has contracted significantly, there's not much movement expected from the SPX. It makes sense to do a 1 DTE or a 2 DTE trade. However, you definitely want to, so if you're going to do a 1 DTE or a 2 DTE or anything beyond 0 DTE, you want to be aware of any potential news that's on the horizon that may affect your position, right? So I'm always looking at the news, making sure I have MA or market awareness, as I like to call it. So today, just looking at, what's ahead for today. So, and again, these events have already occurred for the most part. So we had the guy, the Fed guy, Barr, who spoke at 10 o'clock this morning. And also we had the pending home sales for the month of February that came out at 10 o'clock this morning. So, if you're going to look to put on a 1 DTE position today, then you want to make sure before you put that position on, what pertinent information is on the horizon for tomorrow, right? Because if it's something significant, for example, like the FOMC meeting, right, then you don't want to put a 1 DTE position on, because that could, potentially affect your position and have your position go against you. So you definitely want to have what I call MA or market awareness when you put it on these positions overnight or over several nights, right? So yeah. So again, I may decide before. Again, I'm going to wait until around 2:30, 3 o'clock to see where the price of the underlying is, to determine whether or not I'm going to go on the put side, on the call side, to do a 1 DTE or potentially do a 2 DTE. I'm just not sure yet. So I got to look to see what the market gives me. But I've been on a roll. I've implemented about 68, 69 trades so far, and lost on about 9 of those 68 trades. So roughly 86% win rate, and the largest loss has been $400. So nothing significant. So this is definitely, again, I mentioned before that I just not recently started trading the SPX 0 DTE, but it's a relatively new strategy to me. So I've been taking it slow. Eventually I am going to increase my size, right? But I'm just taking it slow right now, doing 6 contracts here, 5 contracts there. you know, but eventually I will be upping my size to, you know, 10, 15, and also 20 contracts. But you know, I'm a major proponent of discipline and patience, you know. So discipline and patience is what has allowed me to have longevity in this options trading space. All right, so hopefully you guys are trading well. And again, if you haven't already, please subscribe to the channel and also like the video. With that being said, have a great day and take care.